Good morning, good afternoon, and good evening from wherever you're watching from. Today, on this tutorial we're about to take, we'll be diversifying into a lot of things that will help us break what the forex market actually stands for. Like we say, that the essence and objective of this platform is to grow beginners, is to make people find their loopholes where they could be missing in the market. So we'll take our time to really diversify into a lot of things today. It's going to be pretty long video, so I would want to encourage you to just get your chips somewhere, get your soft drink somewhere, relax with this video. You will really gain value from it. Okay, so the chart before us is the gold. I've actually zoomed out because I want you to get it clear. There are some candlesticks you see. Some of us we can't identify, we can't differentiate the candlesticks when we see them. So I'll be starting with this very candlestick here. This bearish candle you see here is called an engulf candle. An engulf candle. At this very point where my mouse is, this was where it opened. This very point, let me quickly spot it out. So the very point where it opened, this very part, this place where there is a rejection, and it seemed like it's later then there's a body. So this big part is called the body, and it opened right here, okay, and it closed at the bottom. So we always have the opening of the candle, which determine the price at that moment, and the closing, which also determine where price got to at that moment, and it closed. So wicks help us to identify reversals also in the market. When this part here, just like your candlestick, when you pick your candlestick, you see there is a tiny part inside of it. This very part is called, where my mouse is called the wick or the shadow. If you're able to identify your candles, like your engulf candles, the doji candles, your bearish engulf and your bullish engulf, when you see the moves in the market, when you see the structures in the market, it will help you to understand. So because candle formation plays a very vital role when it comes to the general market, they will help you, they will give you pictures of how this market actually work. So we'll be going through about three or two charts to help our understanding. Knowledge, they say, is power. So if you really want to be proficient in forex trading, you really need to take time and learn. You must seek knowledge, and you shouldn't lose it. So this very place you see now is the wick. Now at this point, so the green candle was where the price closed, and this green candle represents buyers. That's the bullish candle. Okay, so here was where the price closed. For the bullish candle, price usually closes at the top and opens at the bottom. It opens at the bottom. You should have heard about doji candles. This is a doji candle. This is a doji candle. The small one that looks as if the okay, let me do this. Okay, this one here, my mouse is represents a doji candle. Here represents a doji candle. This one also represents a doji candle. We have a lot of doji candle. This is a doji candle. Okay, we have our soldiers candle. There are a lot of candles anyway, but I won't be have all the time to call or mention all of this. But doji candle represents indecision in the market when there are variations in the market, and one of the candles that help us to identify where there is actually indecisions, like they not really make up their mind, and you see candlesticks just chalking one particular area. They are rather moving, selling or buying. You see long wicks within a point, and you see just a small body. At this point, there is still indecision, just like what you can see here, like this small red one, and you can see the small body here. This is telling you the length at which, or the length of the wick determines the strength of either the buyers or the seller at that moment. You can see this very long one here. So this was telling us the rejection. This rejection, it was fully rejected by buyers. When sellers were pushing down, sellers were dominant from this bearish engulf candle. From this bearish engulf candle down to this level, sellers were dominant in the market. The market was to say that it was bearish. Okay, now when they got to this level, what happened? Buyers came in. So this rejection could show us the strength of buyers, and eventually it just keep dazzling, and before you realize it, gradually buyers took over the market from this level here. You can see, and you can also see at this very point, this long wick with a very small minor body, you see. So this point too, at this height, there was a resistance by what? By the seller. If you look to this level here, where I've just drawn my mouse, my point to, you see there was a rejection. It was at this level sellers tried to push the market very hard again. Actually, they moved it to a very huge peak. This is good, and I can tell you that seller moved this market to about 332 pips or thereabouts. It is not a small force. They pushed harder, you understand. So sometimes too, when you look at the market, it's not all the engulfed candle that actually holds, you understand. There can be some engulfed candle why it serves as engulfing to tell you the strength of either the buyers or the sellers in the market. It also tells you at the moment, it can also serve as an exhaustion candle. It can also serve as an exhaustion candle. Let's take this for instance. This particular engulfed candle. You can see this particular one here where my mouse is. Sellers try to push. We could say this is an engulfed candle because the red one, which represents the bearish or the sellers, is bigger than this one, so it engulfed it, but they could not push further. At this point that they could not push further became the last retesting point before buyers eventually take full domination in the market. So this was the last rejection, okay, before buyers take full possession of the market. And from that point, this market has gone over 1,200 pips, over 1,200 pips from this point where it is. Okay, should we just say, let us not exaggerate it, that the market presently has gone over 1,050 pips. So you should learn how to spot these candles. So how do we really understand better which one is exhaustion, which one is engulfed? And haven't been able to identify the engulfed candle, this, okay, you know, just like what I was saying, is this very green one, because it was bigger than the previous red, it becomes a bullish engulfed candle because it has overshadowed this red. So from this point now, when there is either bullish or bearish engulfed candle, it is trying to tell you the strength of the people that is currently in the market. Is it that the buyers are dominating the market, or the sellers want to start dominating the market? So what we also validate that is your zones. At which area, at what point is this thing happening? All right, so that now brings us to, let me zoom in this very chart. So that brings us to our zones right now. I'll take my time now to talk about zones in the market. So we have our supply zone. The supply zone, it's the point where sellers have seen lots of rejection. Your wig has showed them lots of rejection. Trade has been price action has gotten to a point and cannot break above that point. That level becomes your supply zone, because at that point sellers would want to take dominance in the market. You've seen this very place. There were rejections here. This event has taken place before, long ago, and when it got to that point, exactly that point again, there was rejection. So what validates your rejection? There should be an engulfed candle. There should be series of 1, 2, aside the rejections that will take place in that exact zone, there should be 1, 2, you know, bearish candle to help you validate that, oh, at this very point sellers are about to take over the market. Let's quickly go to our day. Okay, no, let's maintain for hours. Let's maintain for hours. So for instance, right now we'll be able to spot at our supply zone. Okay, now let me talk about the demand zone. The demand zone is just like you're buying, where you're buying from. You understand? Where you're buying from. I will take time to tweet a top-down analysis, okay, but that won't be now. After here we can talk about, maybe on the next video I will take my time to really talk about top-down analysis. So like you see this point, these very points, we can refer this point as what? As our demand zone. Why do we refer it as demand zone? Because for every time price gets to this place, there is what? Always what? A rejection. Price got here, there was a rejection. Price came back to it, there was a rejection. Price came again and could not still break below here, there was a rejection. So these points, you can call it your support. By some persons, particularly on bigger time frame, you call it what? Your demand zone. So it was here virtually that price now broke below, but it didn't really last for long, and we had another demand zone here. We had demand zone. So don't get it confused. You can either say support or demand zone because they are both the same thing. when it's support, that is where buyers tends to start buying, and when it is resistance as well as supply zone, that is when sellers start selling. So that is where sellers would always want to start selling. So here is also another demand zone. Now look at it. For any time on a demand zone, what validates your demand zone? What makes it a valid zone? At that point, when it gets there, you will see candles about forming a reversal trend, a reversal shape, a reversal. Like we can see at this point here, for instance, this gave us a very clear W, which also validates that buyers are about taking over this market. First of all, this W was very small here, and the W could no longer come to the bottom where the previous candle got to. Eventually, this W now moved higher, giving us what? A lower high and a higher high, because here is higher than here, and here is also, you know, higher than this very place. So it's now give us this a clear W shape, but sellers were still very strong in the market, because the market will not always give you a perfect formation. But when you understand these things very clearly, when you understand them very clearly, you would always know how to bat it in the market. Now you can see the next movement that took place here. All these points that the rejection is taking place is actually serving as retest. So for every break of structure in the market, there is a retest. You don't need to be aggressive when it comes to making those moves. You just have to wait. Let's spot at retest, because today I said I want to really take time to break these things down for my newbies. We need to make little fortunes from this FX market. FX market is the highest liquidity market in the world, with about 8 something trillion daily. So like you see, is it 8 points? So like you see now, for every time price action gets to this level, what happened? It kept retesting, it it bounced and moved up, it bounced and moved up. This point is bouncing. What was happening there? Sellers were trying to push further, but because buyers were dominant, buyers refused. So each time you see this rejection, what was actually pushing it? What was actually it? Because the strength of the buyers in this region was very dominant. I want to believe you're gaining value from this video. All right, so very quickly now, having said this, we've been able to spot our supports, same as the demand. We've been able to spot our resistance, same as the supply. We've been able to also spot few reversal. Okay, now let me also spot another very key reversal in the market. Now look at this level that was your supply zone here. When you watch very clearly, you will see a head and shoulder pattern forming here. This is also a clear. So these are the things you should be looking at in the market before you think about, you know, taking any trade. If you understand these things, you wouldn't be in a hurry to take up trades. You wouldn't be in a hurry to take trades. And I can tell you with my full chest that when you don't chase after trade and you know what you're doing in the market, you will make lots of profits. You make a lot of profit. It's just about patience, and you keep practicing. Don't be worried to put your money, but just try to, fail and fail fast. One of my mentors that always we say you shouldn't continue failing. Fail and fail fast. Leave that failing stage very quickly. You understand? So like you see now, this is a perfect head and shoulder. This is your head. Sorry, this is your head here. This very area is your head. Where is my curve? Here is our head. The boxed place is our head. Why? Because it is higher than this level, and it is also higher than this level. Now this is our head and shoulder. So for every time that either sellers or buyers want to dominate the market, they do that with reverse patterns. And eventually, if you wait patiently, you see that once this thing broke the neckline, which is this particular level, once this structure was actually broke, this structure actually was what broke this neckline here, and there was a retest. So for every break of structure, there must be retest. How do you spot your retest? I've said it before. You do that by looking out for rejections. Where there are rejections, what is those rejections? The wicks in the candle, the tiny part inside the big body of the candlestick is your rejection. It's your rejection wicks. They are the wicks. So at every instance of rejection, watch out for what wants to happen there. So very quickly now, having said all this, I believe you have understood that whenever a market wants to either go bearish or go bullish, it does that with candle patterns. So this will help you on a long run to understand how to really spot your market, to understand how to find a valid setup. Now if you look at this level here, there is no perfect shape in the market. This was more like what this very level was more like a demand, because for every time its price retests this level or rejects on this level, what happened? Buyers try to push price up. Buyers always try to push the price up. Then this same thing occurred in this level again, and also occurred here again. So when you need to take your time, open chart upon chart and do proper back testing. Your learning of trade starts with these little secrets. So we will be talking more on the efficacy, on the importance of what counter trend break, counter trending, the break and the retest of a counter trend line, the break and retest of a counter trend line. You know that when it comes to technical analysis, you cannot underestimate your trend line. You cannot underestimate your trend line, and I will be showing you very quickly how it works. Now we've taken our trend line from here. Okay, let's now see at this very stage, we don't draw the trend across the body, we retain the trend here. This is how to analyze perfectly without the use of lot of indicators. You don't need those indicators, because when there are a lot of indicators in your chart, it just keep confusing you. Do a pure naked analysis, you will understand this thing. It's just a matter of time and consistency. Now, at this very level, what happened? Our trend has broken. This trend was really valid because we can have our touches here. We could see very clearly. There was one touch here. There was another touch here. At the tip, there was another touch here. So every time your trend is broken, just like what happened here, you can see that this move broke our trend and retest above it. For every time your trend is broken and the candle or price actions at that moment retest above that your trend line, it is telling you to buy. Now, if you look on the previous market or the previous event that has taken place in the market, you would also realize that this very place is more like what? A demand zone. These very points now you can see here, you can also see here. So haven't broken below this level, it's a confidence to you. So what should you be looking at for? You should be looking at for what? The break of this trend line. Any significant touches upon the wicks or shadows of any candlestick, too significant touches, too significant, particularly on a big time frame like 4 hours, is a valid trend. And when there are multiple touches also on your horizontal, how to spot and identify valid support and resistance. When there are multiple touches of the wicks below your horizontal line, that is also what known as your resistance level, your supply level, your supply zone. And when the wicks are above and the horizontal line, okay, as part of your technical tool, is underneath it, is below it, it's just telling you that this is support. With time and perseverance, you will learn a lot of these things. You will learn a lot. It's just a matter of time. Don't give up, keep pushing, and you will know, you will understand it. This thing is not so difficult. It's not a rocket science. Do you understand? So this is how to spot. Now, what validates if you were to enter this trade? What again validates it? Now we have had a break of trend line. Just be patient. For every break of trend line, there must be a retest. So you are waiting for the retest. Some persons would aggressively taking this trade here, taking this trade here. Okay, yeah, it was actually a good place to take it, you know, particularly when you want to manage risk, like you don't want a large stop loss. But in as much as you've gotten this, you would have also wait for a break of what? The neckline. The neckline at this point was this very place that there was resistance before. Once this level where I just bust right now, once the level is broken, once the level is broken, once this part is broken, at that resistance level, there's a neckline break for bearish, there's a neckline break for bullish, candles. So once it breaks, just see that you are gaining more ground to take up the market. So how do we proceed from here? Having spotted these few things now, what next should you do? You don't know where this market is going, right? You don't know how long it will go, but you have confidence because a significant trend line has been broken and it has retested above it. That being said, your neckline has been broken too, okay, above a valid resistance level. All right, so you have also seen a candle pattern like the inverse head and shoulder. These are things you may not see all these things on one chart, but if you look very clearly, you will take note of it. You will take note of it if you look clearly. So now let us say, okay, we want to take off this trade where maybe we were lost on this point, and this trade just move this far distance. Don't worry, trade will always find its way back to retest, so don't be in a hurry. If we take our Fibonacci here, because this trade was trying to rise, what then should we do? This trade moved from here to maybe this point somewhere here. So both the trend line break and the Fibonacci can work very effectively. What are you trying to actually achieve using the Fibonacci? You can see that I have put this on the origin of the text that validates this swing here. Okay, let's say we bring this bull down to this level. You know, since this is 4 hours, you can now go, after your analysis, you may now go to 1 hour to see if you had valid points on 61, which is which happens to be our golden zone. At this very point, you can see that this trade did not really come back again, but something happened about this place. So if you have been waiting for the trade and you are putting all those things into consideration, at this level this trade tried to rebound back. Sellers tried to take over the market, but when they got to this 61.8 level, what happened? They could not push further. They could not push further, and they lost it from there. The market continued buying. Fibo will always give you opportunity. It is that point where there is retesting. It will always show you. Retest will always occur with rejection. Retest will always occur with rejection. So at this level here, there was a very clear retest, regardless the fact that sellers were actually selling. Let's say maybe this was the initial retest anyway. Here was actually the initial retest that was obvious. You see, we can make good profits in as much as we're in track. Why are we looking at this point? It could be because we were able to identify our entry from here immediately after the break. So I will also use this time to share with us that the 38.2 is also a very valid percentage where you can take up your trade from. For aggressive traders, their first entry is usually upon 38.2%. But if we had reduced this guy now, our Fibo to here, you could see that this same retest, this same first retest failed, between the 68 level and made so much profits to 161 and above. But because we don't want to trade blindly, we have to wait for that perfect swing, for that move. We just have to be patient, because trade is all about patience. Trade, it's all about patience. This was now where the swing that took place from the origin of the Fibo, this was where it actually stopped. Then the retest was not that much. So you can wait for your setup in as much as it's a thing of decision. In as much as this trade has not bounced upon this upon your golden zone, just leave it. Wait such that anytime it comes to that zone, that is when you want to take up your trade. It's patient. It's patient. So now we're working with this present one here, this present retest here. Let's now say, okay, you waited, and this market kept giving you a lower high and a higher high. Then eventually you put your Fibo. What next would you want to do? You take this your trend line and you change the position. You take your trend line, you change the position. This is valid because why? This trade has broken the same trend line. Here there are rejections here. You cannot draw it to be on this because this particular guy wasn't formed yet. So we used where was formed, where it was formed. You could have also said, okay, maybe you draw it here, because this trend, they are subjective to traders' perspective. So we may not draw our trend the same way all the time, because we are having trading from different places, have our different trading concepts. But what matters most is drawing it at the tip, the rejection part of the candle and not the body of the candle. But the other things that can checkmate your trend line to be effective is the previous markets. So even before this thing now rose to this level, it was struggling here. There was resistance here. There was a resistance from this level. There was a resistance. If you see at this tip, there was a resistance. There was a resistance here. This was also a little resistance. So this current part would definitely obey the structures of the market. It will definitely obey the previous structures of the market. So that is what is really happening. So now we bring our neckline. Remember that this level where this my horizontal line is, this level where my horizontal line is, was the place I considered as the break of my neckline. Also remember that at this level, this point, at this point where we see as our resistance, I said the neckline break is that resistance that is being broken and also retest above it. If you remember, this trade retest last here before it swings to this level. So the neckline must also be in line to this your Fibo 61%, 61.8%, and that is exactly what actually played out. This is your resistance. This resistance now was broken, and here became your neckline too. Okay, so at this very level, now when we bring our trend to this place, when we bring our trend to 1, 2, you could see that this trend was actually what broken on this same level of 61.8, on this same level of 61.8. so it was more like what, an intersection. It was more like an intersection. So this is just understanding the importance, how to validate a counter trend line. There is always a break and retest. When it breaks, wait for the retest. When it breaks, wait for the retest. So let us look at USD JPY. This is still an ongoing market. I lost this trade because I had attention for something else, but I analyzed it. I didn't trade it. I was just waiting for that perfect time, but something skipped my mind. So now look at what's happened here. We have seen our market here. This level, like I will say, look for where liquidity has taken place in the past. Your liquidity will define your supply. It will also define your demand zone. Okay, fine. Having said that, let us look at this level. At this level where this support is, at this level where this our horizontal line is, what can you observe? What can you notice here? What can you notice here? There was a long rejection here. There was also a little resistance here before this thing eventually broke. And eventually when it broke above, taking out this structure has been taken. Now the rejection. This point is our retest level, and it retests on what, the previous demand area. I boxed it for you to see clearly. I'm taking my time to do this because I want you to just take your time, watch and rewatch this video. If there's something you're not getting right, hit the subscribe button, comment it, come to the comment section, comment it. We're here to carry everybody along. Now, what also made us identify this as our demand zone? At this very level, what happened here? There was a rejection. Do you see that rejection upon the previous actions that has taken place in the market? Eventually it broke a little, but not for too long. And when it went up again, when the buyers tried to now was taking dominance in this market, what happened? They came through with an engulfed candle. these are our green here. Let me zoom out. So for everything I'm explaining here is what I practice. This is an engulfed bullish candle. This is an engulfed bullish candle, and it came with a rejection. Who were present in the market? The buyers. That is why we can see this rejection at a lower level. When we see long rejection at the top, at a resistance level, who became the dominant then? They are sellers. So this rejection tells you the dominance in the market. All right. So now, this was how I analyzed this trade before. It played out, but I just missed the entry. I would have done instant. I would have done a buy limit, but I didn't just remember it. So I was just waiting for instant execution, instant market execution. So now, what are the things we should be looking out for? Like the way I analyzed this trade, I took my trend here, this trade from this very point, from here, I do my trend. Now, even if I reduce it to this level, you will notice that you will notice something. You can as well take another one here. It's the same thing. So what really happened here? You can take instance of what has happened. You will notice from this trend line there were moves. You can see, you can identify your lower high and higher high. There was a move. You can clearly identify this movement. This is the structure of the market. This is the structure, break and structure. These are the things you should be looking at. What is the structure of your market? Is the market forming a lower high and a higher high, or is it forming a lower low and a higher low? Is it forming what is it forming? If you can spot this very clearly, you will know that buyers are presently dominant in this market. So now, just look at it very clearly that okay, we have actually lost this entry. Somehow we lost this entry. Now we're back waiting for another perfect entry. That perfect entry is what we want to spot. That perfect entry is what we want to know about. Don't forget that all these actions has taken place. We have seen that from the structure of this market, buyers are really in this market. What do we do? Our trend line will help us. These tools are not for fancy. They will get to support us to know this market, to understand this market. If you take your trend line very serious, your trend line is very, very effective. This is a triangle. This was actually a break of a triangle. If you can see very clearly from the previous market, because you use the previous market to determine the future, you can see very clearly that we have our lower high here, higher high. You can see very clearly that this market has given us a structure. So take up your trend line from the bottom. You drop from the bottom, last rejection, you draw. So at this point we can as well see this is a liquidity level, for buyers. This is very clear. This is clear. There was rejection. This is another one here. So we can count 1, 2, 3. Here is the fourth one, and here is another one. For every time price cannot meet the previous point where it left, use it to just observe. You need a laptop for clarity. Use it to observe the market. So what should we look out for next? This thing has happened. Now there was a break. This level broke our trend line. Our trend line was effective. It was valid. Our trend line was valid here. This chart I'm talking now is a parallel chart on USD JPY. 1, 2, on daily time frame. Any break on a bigger time frame should not be toyed with. Just look for your retest and enter the trade. You must make something out of the market. You must make profit out of the market. Now when we take this guy here, our horizontal line, where could have been the best place to take up the trade? If you watch very clearly with me, you will see that this whole level is a resistance, a structure that has been altered. This very level where I just boxed is what? A structure that has been altered. This structure has been altered from previous market. You know what? When you have passion for something, you will take your time to learn it. If you see very clearly this structure, for any structure that is broken on a daily time frame, wow, do you know what it means? This structure has been broken. This structure started from 11th of April. 11th of April, this particular resistance level that was broken. 11th of April, that was over 2 months now. So this structure has been broken. Let me quickly change the color of this box so it doesn't really get us confused. It's very simple to change. I'll be using blue right now. Okay, yeah, so I think it is very clear now. Okay, so this box was broken. How did it happen? This is our trend line. Our trend line. I just want to use it to give clarity on what has happened. What you are seeing now is a W shape, because I say when a candle, when the market wants to reverse, although there is still resistance, this thing is still resisting. But don't forget, there was a massive rejection of this doji. Let me show you so it will be clear. There was a massive rejection. This particular doji, this particular place where my my mouse is, you can see this very level where my mouse is now. Okay, I believe it is clear now. Was the same structure that has been altered. This structure has been altered. I can tell you that this guy USD JPY is moving further. We're expecting our first target to be here, so I will also be looking for I will need a retest here. Eventually it will retest because there's a resistance level. This particular place, there's a resistance here. In this particular place there is a resistance. This level we can see weeks already, so that is why it is struggling. Eventually I'm expecting that sellers will move it a little, and when it come back I'll be entering the trade. Now, how do I now spot the best place to take up the trade? That is where our Fibonacci comes in. That is where our Fibonacci comes in. I've seen everything I want to see in the market. I have seen everything I think I should see. Like, I've waited for the right setup to play out. I have seen my lower high and higher high swinging from the past events. I've seen this market came back, but it could not break below this lowest level here. I've seen that this market could not break below, it could not go below here, and it could not go below this level. This is how, the way you envisage the market, it matters a lot. You trade, this is how to trade like a professional. Because if you rush into the market, you will run out with losses and you will keep blowing accounts. Don't forget to always put stop loss. So no matter anything, nobody, no professional should deceive you not to use stop loss. Stop loss will stop you out automatically. At least you don't get to lose all of your accounts. If you have $100 for instance and you're using your stop loss, even if your stop loss is about $5, you will eventually take up that trade as many times as possible. If your stop loss is $5, you must have taken up to 20 trades before you blow account, and you cannot lose all the 20 trades. So it is impossible to just blow accounts if you're patient enough. Take these teachings and be wise. So I am expecting that trade with text at this very level here. We can see there's a resistance, we can see there's also a rejection. There's already a rejection here. There is already a rejection in this part. So what this part wants to do is to give us an M shape, but this M may not hold. It may just rebound a little and move up. Overall, what I'm seeing here, even if it will come down, at least it must get to this level. It must hit 145.865. let's say 145.800, and the next target is 148.200. 148.200. That is the beginning of the tips of your trend line that was broken or that has been altered. So if you look at this trade very clearly, this is why I am saying make the trend your friend. Make the trend. Don't take anyone for granted. Don't take anyone for granted. This thing is very clear. Like you can see where this your trend line started. we are already having a W move. 1, 2, 3. What is this? Is this not W? Is this not W? So I want to believe that this knowledge I'm investing on the new people trying to find their way out in forex will really be impactful. Understanding trend line. Okay, having said this, I've seen that my structure of 2 months plus, which is very close to 3 months, as 11th of April, has been altered. So I have confidence. I have been able to spot a candle pattern or a chart pattern that is telling me glaringly that this market will also reverse, which is RW, which is a W. And let me now bring my Fibonacci to wrap it all. Don't forget that trend line doesn't work alone. After all these confluences, these are confluences. Bring your Fibo here. Where was this thing moving? Hopefully we were expecting that, okay, this market was going to buy, will buy, right? This market is currently at this level. At this level, this market previously, the market brought to this level, right? And it's retested, but it now came back to 0. So this very level, this point here, where this my mouse is now, is our banks. One touch, second touch, it is valid, right? As a trend line for buying. Support that is giving us that it's likely to buy. We have our moves like the lower high and higher high. Then we also have been able to spot our reverse pattern like the W. We have seen break of structure. What else are we looking for? We have seen a trend line broken. Now we're waiting for a proper retest. We are now waiting for another retest, probably because we had missed the entry at 38.2. The second retest that we bounced on 61.8 shouldn't pass us by. Now if I take this my horizontal to 61.8 level, that is to say that we're expecting this trade to bounce back to 144.3, 144,300. When eventually if this happens, take up your trade on buy. Set your first position at 145,800. Set your second position at 148,300. I want to believe that this helped us break it down so much. It has helped us. If you trade this way, believe me, the sky will be your limit. The sky will be your limit. The sky will be your limit. Now, this is another chart we can see before us. This is GBP JPY, the pound sterling and Japanese yen. A very quick recap on this. Okay, we expected GBP to come down, yeah, last week, because there was a lot of resistance in the market. There was a lot of resistance. Okay, but that thing happened. That did not happen. Eventually GBP started, it broke above the structure of the resistance. This was the structure of the resistance. So you should think broad. Don't have one way thinking in the market. Don't think only one way direction. The market should tell you what you should do next. Don't just believe in your own perspective. You have learned. See, even tailor that sewed clothes will make mistake and correct back. Restyle that clothes that he or she has sewn and makes it even more beautiful than what was initiated in the first place. So your ability to identify your structures, your key structures and zone matters a lot. So if you were looking very clearly on this market, you will see some moves. This is why the tools are there for us. This is why the tools are there for us. These tools are not for fancy. So from this very point here, from this very point where I drew my trend line from, we can say that our trend line is valid because we said one, we have its second touch here, and we have the third touch here. All these are new markets. Some traders, particularly the big guys in the market, may not teach you all this. You have to pay for their course. You must pay before you learn those things. But I'm giving out this knowledge for free. Take it and appreciate me later. Now you are saying, as small as this trend line that has been broken on 4 hours, this trend line is valid because we have one touch here, we have another touch here, and eventually it was broken. This happened to be a resistance level before. I was looking at, oh, this thing was smashed down, but we didn't just assume. Remember that when I first dropped this analysis, I said I will wait until it breaks below this valid trend that was serving as support for buying or for a bearish move. From this level, from this beginning of this trend line, you can see very clearly, it was very clear that this thing was giving us a lower high and a higher high, a lower high and a higher high. See, it got to this resistance and it kept bouncing here. So it kept moving. Although this move may not be long on GBP JPY, it won't be long. I can tell you this, it won't be long. But actually what has happened, our trend line has broken. So for any time a significant trend line is broken, in as much as that significant trend line made 2-3 touches, just counter trade. So this was like an angle. This was like an angle here and here, and it has been broken. So for someone that was able to spot this, or traders that usually understood what counter trade is all about, this is already 100 pips. Even 100 pips with 0.01 is $10. In Nigeria here, that is 16,000 plus. $10 is 16,000 plus. Yeah, so I think I got this particular trade. I caught this one. And whenever you follow a counter trade very well, your stop loss is usually small. Your stop loss is usually small. So I want to believe that this video helps you gain one or two things. If you would like us to continue doing valuable contents like this, please do not fail to hit the subscribe button. Hit that button, subscribe, and comment. Your comment matters a lot to us. Alright, love you to stay blessed, reflect on the things you've learned,